Welcome to the June 8th, 2020 Advance Report for NetWorthRadio.com listeners and McGowanGroup clients. I'm Spencer McGowan, your financial weatherman, with your fast-paced tour of the global financial markets. I'm also president of McGowanGroup Asset Management, and yes, the office has reopened with safety precautions for client visits. Clients coming in to update their plans, our new clients coming in to get their original plan, and we invite you in to the office at the Crescent. We are looking at the Dow Jones Industrial Average year to date, and we're going to cover some year to date for different categories. Dow hit 27,000 this week in a surprise rally. That was concurrent with the jobs report. 2.5 million jobs restored in the month of May. And we're not even fully reopened for business in the country yet. At that pace, it would take 12 months to get to record employment, and maybe sooner. But that's what the market begins to anticipate. Where do we go from here? Well, this may be too far too fast based upon the dire corporate profit reports or lack thereof coming over the next 60 days. We'll keep you updated on that. Here we go with the GDP. It shows this quarter coming in by estimates of the economists in Bloomberg, a minus 34%, so about a third of the economy gone during the shutdown. A 15% recovery here. What we're seeing is actually more robust, so that number should be coming up. But it is closer to the 19% projected rebound that we cited from another source about 3 months ago. And we see this recovery here gaining strength. That's what this week was about. Over anticipation, likely with the Dow at 27,000. What do? You get paid to wait, and you buy assets that you're going to be comfortable owning because of their eventual value. And we'll get to that strategy here in just a second. It shows the damage to 2020 at a minus 6%, minus 5.7, a rebound of 4, and 2022 appears to be record economic activity based upon that projection. Here we go. This is the healthcare index. It had a huge correction, great opportunity to add medical dividends, and year to date strong. Where does it go from here? Permanently higher funding for healthcare, both at a personal level and a national level, and the insurance companies. Now, second, we've got high yield. This is the high yield index year to date. You can see the low was 68% of par. That's 68 on the index. That was about 88. We returned to 85 on the high yield index. That's 15% below where those bonds are going to mature in the short term B-rated corporate market. And there's still tremendous bargains that pay quite a bit more, get paid to wait. This is the high yield index back 2008, 2009. As we've referenced before, we recovered to record profits in 2009. It took the equity markets all the way till 2012. When you say, when do we get to record corporate profits? That would be when the Dow tops 29 or 30,000, according to the previous crises. Here on the high yield index, recovered from about 68 to the 85. Notice the rapid recovery there because bonds tend to go back to par. We're in that process right now for the global high yield and still snapping up discounts. Compounding good high yield funds, as we covered before, from 2007 to 2012, you actually had about a 14% return global high yield in our example we were citing, and about 10% for the domestic high yield well managed. That's one of the categories that we're highlighting again this week, and the recovery going as we had projected and discussed back in the pandemic. This is oil year to date. There's minus 37 a barrel. First time in history, may never happen again. $39 a barrel for oil this week. What does it mean going forward? Well, recovery and demand is right here. This is a chart back to 2005. For both the pipelines, the energy infrastructure, and the oil. Energy infrastructure dividends over 10%, and we're starting to see that rebound gain steam at this point. Those assets could be the best inflation hedge, getting paid to wait, compounding those dividends, and with this recovery in oil prices, you begin to see the potential for this index to return to more normal pricing, which from here is still substantial capital gain potential, and the highs in the index were as much as threefold. When oil gets to 80 or 90, if it does, then that would be the category that would be favored. You want to be there early and compound while you wait. Futures market says oil hits $43 a barrel right here at the end of 2022, 40 by November, and then next year, gradual increase from there. That's probably light. Join us this weekend for the NetWorthRadio.com broadcast. We have a institutional research analyst on the program about this recovery and about his projections for oil prices at 55 next year. I'm Spencer McGowan, President, McGowanGroup, NetWorthRadio.com. Join us there for this weekend's longer play program. And remember to set your time to come down to the Crescent, meet with the team that cares for a new plan, an updated plan. Get the team that cares on your side. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.